26,000 on the cards for the Nifty. You'll be tilting more towards that. Focus shifts to budget as well as, the earnings. And you like sectors like banks, infra, as well as defense. And the two stocks that you've named is Reliance Industries as well as Bharti Airtel. Rahul, I know your love for two-wheelers as well as four-wheelers and for the circuit as well. I believe you were doing some racing over this holiday. But the sector that you like is not autos. The top sectors, I believe, metals, you're saying, right that. And from the banking pack, PSUs is what you like. Could you tell us a little bit more?
Yeah, absolutely. Timing is everything, whether it is technicals or whether it is, these autos. The point is, go with strength first. They are the ones which have been the least hit. And there is, a good enough reason for them to rally once the market stabilizes from here.
Right. Didn't know that you were a biker, Rahul. Interesting one out there. So next time we'll not only talk to you about the charts, we'll ask you about, some of these trails as well. Though, in my defense, I don't know how to ride a geared bike, but maybe one of these days.
Even Rahul likes the four-wheelers as well. I think he did. You did a drive on the circuit, I believe, right? Is that correct?
What circuit is this?
Yes, absolutely. So this was a small one, but quite an interesting one as well.
All right, interesting. Right now, the only circuit that the street wants is the upper circuit on the market. But be that as it may, let's wrap this with Sanjay. The last word, Sanjay. You did speak about the sectors you like. You did speak about all the things that can outperform from here on, or you're betting on. One state conspicuous by its absence was any of these consumption themes, be it autos, be it consumer discretionary, staples, retail. And especially at a time when the last 7 or 8 months, the government's tried to do everything it can to revive consumption. And then you have, the 8th pay commission coming as well.
Yes. So we are positioned on discretionary side on autos, and it's worked well for us. But, now they're not cheap. Maruti has moved up quite well. So while we are holding it, but we think near term, I think they're done for the time being. I said for a core holding, we will not tinker with them, but they're not cheap anymore now. So M&M and Maruti we own, and it's worked well for us, and we will continue to own. On the other piece of consumer staples, we still feel growth is quite weak, and the moat in each of them is really getting attacked from multiple sources, and valuations are still not okay. So we would want to play consumption through, maybe financials, telecom, NBFCs, discretionary auto, where we feel at least, you have more clarity on growth and reasonable valuation.
Okay. Got it, Sanjay. Thanks a lot. I think Mangalam will be going through a lot of those FMCG names and their results and trying to dissect them. Maybe, in fact, one of those staple companies could come on your radar. For the time being, you're saying stay away from staples. You find plenty of other better opportunities in the market. Thanks a lot for joining in, Sanjay, as well as Rahul. Wishing you all a good remainder of the day. But we'll slip into a short break. On the other side, Mehboob Irani is waiting for us. We'll discuss some of the top stocks that are on the news. Welcome back. Normally we start closing bell at this hour, but we started half an hour early because of the kind of volatility that we saw in the markets. Nifty was down close to 200 points, and now as we speak, we're up around 50 points or thereabouts. Sergio Gor's comments clearly, giving the bulls something to hope about. He's saying that yes, they could discuss the trade deal, could discuss it. Not just going to have a chat with that, but the street is optimistic that there will be some kind of outcome. Well, let's find out first, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, if you went ahead and bought at lower levels, I think today you were suggesting to buy at around 25,400 or thereabouts. I think we went down to around 25,480. And from there, we did see a good bounce. What do you think? Enough gas in the steam to push us higher? Or would you take some profits if you bought earlier today?
So, Nigel, we didn't buy because, as I said, we were waiting for lower levels. So we have some options positions on the bullish side in the Nifty, have some call options because we didn't kind of hit the lower level. So futures position did not get initiated. But I think it looks like, market which has fallen vertically is trying to bounce back a little bit from oversold levels. My sense still is that, it will be very difficult for this index in the short term to get past 25,950, 26,000 zone. So let's say if you bought anywhere close to about 25,500, 530 zones also, then I think just take some profits and trail your stop losses to about 25,630. I think on the upside, as you get closer to about 25,900, traders should be looking to exit long positions and then see if, there's weakness and we can reinitiate on the positions on the short side.
Got it. Okay. All right. So not sounding very optimistic that we can get past the 2050 DMA band, which is ballpark around 26,000 odd. Mitesh, give us a couple of trading calls though, because stocks are doing a thing of their own.
Yeah, they're good. A lot of stocks have reversed. The first one is Asian Paints from the buy side. Keep a stop below 28.54. Look for targets of 29.40. And HAL is a buy with a stop at 44.79 for targets of around 4,600.
Okay, all right. Thanks a lot for that, Mitesh. Well, good time to welcome Prashant as well. He's in. Manglam's taking a bit of a break. And Rima will join us in a bit, I'm guessing. Hey, Prashant, green Rima, on the screen.
Rima's already at TCS.
Oh, surely there.
I think. I don't know. But anyway, TCS later today will be interesting. Nigel, I mean, it's interesting. Markets have rebounded quite nicely. And of course, the Sergio Gor comments are helping.
Yeah.
But the one name we track, Gokuldas, which is the indicator, that is down 5.5%. There is no recovery in that one. So I kind of wonder whether, of course, I mean, I think those Gor comments were the trigger and the market took off vertically. But, you would have seen this one sort of come up. We should put up Gokuldas, basically, is what I'm talking about. You should have seen some interest, some comeback here. So the question to ponder, to wonder is essentially this. Even without Sergio Gor comments, and maybe we would not have a vertical rally, but are we getting to levels where on a F5 28 basis, things are looking slightly more reasonable, etc., after the sharp fall that we've had recently across the board? Opinion, of course, is divided. There are many seasoned investors who believe maybe a little bit more is required and prices need to grow into earnings, etc. But I mean, I think into valuations rather. But it's a debate which we will keep having here on the channel. Capital goods stocks is the other area. I think Hitachi's recovered from the lows. GE T&D is the other one. Transformers, CG, etc. They all actually in the morning, along with the market, were down sharply. We had IIFL Institutional Equities' Renu Baid, who told us that her industry checks indicate that a large Chinese company, which has got manufacturing facilities in India, will be allowed into to participate in tenders on the power transmission side. Vinny's here with details and what she's put together. Vinny, afternoon.
Hi, thank you so much for that. Yes, so firstly, let's just take a flashback in terms of what happened last week and why these stocks had fallen. Now, according to a Reuters story that came in, that Finance Ministry was planning to scrap the 5-year-old restrictions that were there on Chinese firms. These restrictions came into place in 2020 on some of the power, railway and other sensitive government contracts. Then, obviously, CNBC confirmed with some government sources as well. They said that no decision was made as yet. But before that, the stocks were beaten down already. And then, despite this notification coming in or the clarification from sources that came in that, there's no decision yet taken on this front, still the stocks are falling. Even today, we saw the stocks falling in trade. Now, Renu Baid of IIFL, what did she say? She said that no government notification is there as of now, even till date, in terms of lifting these restrictions. Channel checks are suggesting that TBEA, which is a big Chinese company, they have been approved maybe for participating in high voltage reactors. So only a specific product, maybe where they can start participating in these government contracts. She also highlighted that, even if this comes through and TBEA is there and participating in this contract, she's not expecting a lot of impact in terms of the performances of our Indian companies. So not much of a worry. She doesn't expect much of a change or fluctuation in terms of pricing as well, at least in the near term. Now, apart from that, what we also had is a lot of other brokerages wrote about this. They said that the relaxation may be more segment-based with prior requirements, part that they want to participate in a government contract by these Chinese firms. It's not going to be a blanket rule that the restriction is lifted for all Chinese firms or even across the board in terms of transformers or in terms of reactors, not across a blanket rule. So maybe negative impact could come in for something like an L&T, BHEL, GE, Vernova, TND, Hitachi Energy, Siemens Energy. And that is why we've seen a bit of a fall coming in these stocks in the last 3 trading sessions. But that is something that we'll be keeping an eye out on, whether this actually comes in terms of any notification.
Okay, all right. Thanks, Vinny, for explaining that to us. Mehrbon Irani as well joins us on the show. Hi, Mehrbon. Good afternoon. Good to see you in. First time we're speaking in 2026. So wishing you a cracker of a year and look forward to interact with you as the year does progress. Give us your view on capital goods. They thought it was going well for it. Unfortunately, the last few days, they've been very, very nervous for the reasons that Vinny put on the table. After this kind of decline, would you be interested or will you stay away?
Happy New Year, Nigel. Happy New Year to all the viewers. And I hope that the New Year, though has not started very well for the markets, hopefully will end the year on a much, much, much better note. Keep fingers crossed. As far as capital goods goes, as far as Chinese companies will be allowed and this and that and all, I think there was a report from a otherwise very respectable agency about Chinese companies. Government will ease restrictions for them for bidding for government infra as well as power sector projects. I think the same evening, the government statement, whatever format it came, they denied it. Unfortunately, many accidents are taking place off late in the markets based on such information which is floating around from respectable agencies. Many times it gets denied. Now, even I think on Friday it was Manappuram Finance, Bain Capital, RBI restrictions. Manappuram comes up with a statement. The stock comes around 310 to 278. I think all this is just not fair. When we come on television and give some recommendations here and there, we have to be very, very discreet in what we are stating because the regulator is looking at us. It's as simple as that. So why are these agencies not being questioned? It's a simple thing, I'll put it. Anyway, let me come back to the question which you asked. The report surfacing that government may ease restrictions on Chinese companies suddenly was a big negative as far as sentiment goes for virtually all capital goods stocks. Fear of renewed competition from Chinese OEMs for project orders, pressure on margins, visibility of projects going ahead, all this became a little bit of a question mark in the minds of the market, which even otherwise the market has become very suspect of things around because people are virtually seeing blood on their portfolios for the last maybe 1 to 3 months now. So any negative news, people are extrapolating it. Now, stating that it will be only for reactors or some products here and there is a different issue. In some cases, the weak or delayed orders for the capital goods sector is also starting to happen. And I'll give a simple example. I think on Thursday last, Elecon Engineering, a company which I'm owning the shares, otherwise a good company, announced numbers which were definitely not great, but were not so bad also. And the stock was down 18%. And what was visible in those numbers was the execution problem and somewhere the feeling that they are not getting the collections or the money or the receivables on time from the companies from which they have got the orders. So this is definitely unnerving the market. And let's accept one thing, capital goods over the last 3, 4, 5 years has been one of the most preferred sectors of the market. The companies are doing well, growth is happening, the stocks somewhere are a little bit expensively valued. And with this type of news floating in the market, plus the Elecon results, which I am singling it out right now, I think couple of reasons here and there, and you may see the stocks correcting 5-10%, and that is exactly what is happening at the moment. As far as the Chinese things goes, I personally hope that there will be a little bit more clearer clarification coming from the authorities.
Okay, all right, got that. But Merbun, you know, when you were talking about responsibility and various networks reporting this and that, you also briefly mentioned gold financiers. You know, it could be actually a very, very good scenario for them that plays out because the world has gone into a bit of a funk and that gold price could get protected at these levels, if not go up. And the cost of borrowing could come down because, you know, there are still some cuts that are in the works. That means the cost of borrowing could actually come down. How would you view the gold financiers? And we have namely, you know, a few names, Manappuram, Muthoot, IFL Finance. I don't know whether you want to throw in Capri Global in there, but your view?
I am personally holding Manappuram and Muthoot, so with a clear disclosure that I'm holding them and I intend to keep on holding them. As far as my view on precious metals goes, I've been quite vocal to whoever has asked me over the last 6-7 months that I'm very bullish on silver as well as gold. Can they correct by 10, 15, 20% also? The answer is yes. Will they be higher from there? Answer is yes. The world is becoming a very dirty place. We all know geopolitical problems virtually are surfacing every now and then. There could be pressure on dollar here and there. Going ahead, certainly. So I think precious metals is a good place to be in. Now, what has that got to do with gold finance? Gold finance, I think you rightly mentioned it. And Nigel, I keep hearing you about gold finance and about metals in general. I think your comments are very direct, very straight, and very clear, and very apt. So I think Manappuram and Muthoot are, I don't know much about the other two which you mentioned, and I don't own them, but as a space, I think this should continue to do well. As far as Muthoot goes, I think the company has clearly refused to, as clearly stated that they will not go in for financing against silver ornaments. But as far as gold ornaments goes, I think they are doing gold financing goes, they're virtually doing a great job. Manappuram had its own problems, the microfinance business, and they have been working on this deal with Bain Capital from March 2025, if I'm not mistaken. Most clearances are in place. They are stating the RBI clearance will also come into place. And if all this happens, I don't see the stock not going up by at least 10-15% more from here. As I mentioned earlier, any sort of news coming here and there, there could be a sharp retreat for the stock. This happened for Manappuram, but I think this continues to be honestly a good place to be in. So Manappuram, Muthoot are in my portfolios, intend to hold it, and I would advise that people who are holding it can continue to hold it. As you rightly mentioned, this is a good space to be in.
Okay, all right, Merbun, stay with us. I want to highlight what's happening with Tejas Networks as well. It's a complete collapse. So it's not as if it's a stock which has done well, bombed out name, and further selling pressure here after second quarter. Numbers from the company. Vinny is here with details. Vinny, take it away.
Hi, so numbers were not a good one this time in Q3 FY26. Year-on-year basis, the revenue was down by around 88%. The EBITDA has seen, actually it's an EBITDA loss this time of 134 crores versus an EBITDA profit. So clearly, obviously, the company is reporting a loss this time as well of 196 crores. Now, this is an indication that one, there were weak sales. There's deferment or delay in terms of the major BSNL order that impacted the top line as well. And seems like, you know, that peak that one saw in coming for reflecting in the numbers for the execution of BSNL, that seems to be done for the company. Now, apart from that, when you look at it, the delays that has been continuing for a while and seems like it's worsened a bit as well. Fourth consecutive quarter that the company is actually reporting a loss this time. And overall, when you look at it, the cash position for the company at the end of the quarter was at 537 crores and net debt stood at around 3,349 crores and versus 3,738 crores. So obviously this is mainly a bit lowering in terms of the net debt because of the lower capital working that's come in. But all in all, not a good set of numbers, and that is why we're seeing the stock fall in trade as well.
And I'll ask Merbun about Tejas in a bit from now. But Nigel has walked across to the wall to the F&O positioning and F&O desk. Nigel, take it away. What's happening?
Well, you know, Prashant, at the start of today, we had hired two key factors that we were looking at. One was the FI net short positions, which had reached the extreme level on the upside. And the other factor was the Nifty PCR that had reached the extreme level on the downside. Now, the PCR, the last time I checked, has moved to around 0.85 from around 0.6. And when we did see that bounce post Sergio Gor's comments, well, the PCR was actually at around 0.62 odd, which tells you that historically we have bounced from there, and today was no different. However, the reason can be different each time around. Now, pull up a couple of strikes today. Some of those put buyers, they were well in the money. They were dancing away to the bank. The 25,600 put, the premium at its peak today was 145 rupees. That's come down to around 21 rupees. So now that we are seeing that there is writing, from the lows of the day, there was actually writing being seen out there. And some of those put buyers will be actually repenting that they didn't square off those positions because they were very, very well in the money. Even pull up the 25,700 put, the premium right now is around 42 rupees. At the peak of today, what it was at? 225 rupees. So a sharp downtick is what we're seeing, but there are signs of writing at both those two strikes. So if we give you a broad range on the Nifty, it'll be around 25,500 to around 26,000. Why do I say that? The low of today is ballpark around 24,800, 25,480 or thereabouts. And on the upside, you have the 20 and the 50 DMA. That's at around the 26,000 odd mark. So yes, we're seeing a pullback in today's trading session, but it will require a bigger effort to get past the 26,000 odd mark. Individual stocks, mines, metals, they continue to remain in focus. So there are signs of fresh buying that we're seeing on Tata Steel. Big uptick is what we are seeing on the stock, and as well as open interest built up. Coal India, that's come in for a short covering bounce. After not doing much for multiple months, they have this BCCL IPO that's currently underway. It's seeing massive subscription out there. And there's hope that maybe valuations as well are pretty much in line. That one, in fact, is coming for a bit of a short covering bounce. And SAIL, I think you should keep an eye out on this stock. There was some shedding that we're seeing on this particular counter the last time I checked. And I think possibly in the next 2 to around 3 trading sessions, it could possibly come out of the F&O band. So the market's at the high point of the day. A couple of those technical parameters did get stretched, and that could be some of the reasons that we saw a bit of a bounce. Back to you, Prashant.
All right, Nigel, thanks very much for that. So that's an interesting state of play. Mehrabun Irani is with us. Mehrabun, we were talking about Tejas Networks earlier. Any thoughts on this one? Tata Group company, one of the few companies, I guess, in that segment and across where it's got very, very strong IPs, is involved in 6G. I mean, technology-wise, right up there. Share price-wise, right down there. What's the call?
Tejas always had the credibility, still has the credibility. It's ultimately a Tata Group company. Quite a few funds, I remember, was speaking very positively about it. They became the Pied Pipers and everybody else followed. There was momentum in the stock. Stock went to DC levels and people were justifying it. But they all ultimately fall and they become a victim to something called the growth which is projected, which is factored in, and ultimately what the company delivers. Look at other names also, like say a Trent, a Tata Elxsi, a Protean, Keynes, Dixon, Sterling and Wilson, Blue Jet. Look at the valuations they were commanding, and they're all fallen to earth right now. Are they bad companies? Certainly not. Are they in decent businesses? Answer is yes. But you can't be going on chasing such stocks. So Tejas was a stock which people went on chasing. And for the reasons that you rightly mentioned, telecom equipment maker, BSNL, progressing to 5G, 6G, routers, for broadband and for other things. I think it's a good company otherwise. But a year ago, when I heard the conference call, I became convinced that the numbers going ahead are not going to be good. The management went on defending itself, stating that things will improve without having a very clear explanation as to how and when the things will improve. So one fine day it will improve, but for the moment, I think the numbers are dismal, to say the least. I think with a loss of 200 crores for 3 months period, and with the turnover dropping by 80% over what it was last year, the writing is on the wall. So people who are not yet sold into it have nothing else to do but to keep on holding on to it. It's a good company. One fine day it will recover, but in the near future, honestly, I don't see it happening. So this could be a stock which will have a sharp bounce back as and when, because it's fallen so much, but there are no triggers as such possibly to go ahead and recommend the stock just because the stock is 1/3 or 1/4 of what it was, say, a year and a half ago.
Okay. All right, Mehrabun, thanks a lot for joining in. Look forward to chatting up with you soon. We appreciate you joining in. By the way, the markets from being down 200 points, a big reversal is what we're seeing. Now we're up a good 100 points with the Nifty Bank holding above the 20 DMA. Slip into a short break, you come back. Rahul Veera of Nippon India AIF is waiting for us with his commentary on the markets.
Welcome back. Just coming up to the 3 o'clock mark, let's go across to Hormuz, who's now standing by with what's moving in the broader market with volumes and with price action. Hormuz, take it away.
Boy, what a turnaround this has been in the second half of the trading session. And one name, though, that still continues to remain an underperformer is Laurus Labs. And it's been underperforming after the record year that it had in 2025. It's the third straight day of losses now for the stock. They're almost 4% lower as we speak. Profit booking now seen from record high levels. The last 3 sessions, the stock has declined almost 8%. That you have seen 20 lakh shares have been traded, double the 20-day average, which is 10 lakh shares. And the stock is now trading around its 50-day moving average of 1,028. It's looking to take support at those levels and rebound from there. And the 2025 was the best year that the stock had since 2020. The stock had gone up almost 65% last year. JTL Industries is an outperformer in today's session, among the top gainers on the small cap index, almost 20% higher now, the biggest single day gain on record. Snapped a 5-day losing streak today. Volumes are the highest since December of 2023, and before today's session the stock had gained only in 5 out of the last 24 trading sessions. In today's session itself, we have had 4 crore shares that have been traded on the stock. The 20-day average is only 4.5 lakh shares, but despite this, the stock remains below its key moving averages. Now it is heading towards one major level, which is the 50-day moving average, that is at around 61.5, and the year gone by was a forgettable one for the stock. Was down almost 40% back then. It was the second straight year of negative returns. Kernex Microsystems is another name that's not doing well today. It's a 9% lower, the biggest single day fall since April of last year. 5th straight day of losses for the stock. Volumes are the highest since May of last year. We'll have 13 lakh shares that have been traded already, 20-day average of just 2 lakh shares, and the stock is now trading at its 200-day moving average, a very important level of 1,093, and it's already below the other key moving averages. And from its 52-week high, which was close to 1,500 rupees, the stock has corrected almost 25% from those levels. And lastly, a segment that has not participated in this recovery is the real estate stocks. Well, Signature Global, Prestige Estates, Godrej Properties, all of them still trading 3 to 5% lower, and significant volumes as well. With Signature Global almost 3x of its 20-day average, Prestige Estates also 3x its 20-day average, Godrej Properties almost 4x its 20-day average. So significant volumes. Real estate is one sector that continues to remain under pressure despite the market recovery.
All right, thanks very much for that, Hormuz. Rahul Veera is with us, Fund Manager, Equity Investments, Nippon India AIF. Rahul, good to have you with us here. Good afternoon. Thanks very much for joining in. You know, the last bit, which is real estate as a pack, I mean, it's been the underperforming space of 2025. Just, I mean, point to point, in the 1 year period. Of course, before that, it had a couple of years, a great run. Where does it leave us, Rahul? You think in this space as well, prices are off 30-40% from their highs, depending on what you look at. Prices are attractive, or you think one needs to be careful?
Yeah, one needs to still trade cautiously in these names. If you see as a valuation metric, right, percentage of NAV, usually these stocks were trading at 60 to 80% of NAV prices on a normal cycle. In the last 3 or 4 years, when the market cycles or the wealth effect was very good, these were trading at 120%. So this kind of an offbeat valuations was a little bit too expensive for us to look at the sector. We believe still 1 or 2 years we are still away, even though EMI, rate cut cycle plus your affordability index will see some kind of an uptick there. But again, on the luxury end, we'll see some kind of a pressure there. So again, real estate stocks on a broader basis is still a word for us.
Okay. Hi, Rahul. Good afternoon. Good to see you, Ben. First time we're speaking this year. Wishing you a cracker ahead. Rahul, if I'm not mistaken, the fund is approximately, 3,500 crores or thereabouts. You could correct me if I'm off the mark. But give us a breakdown, actually, because you'll do both equity as well as debt. So tell us, what is the mix right now? And also, how much of cash are you sitting on? Because some are saying they're sitting on cash. They believe there's further pain in the markets. And that time, they'll be buyers.
Right. Yeah. So you're broadly correct. We are managing close to 3,300 crores of AUM as of now in the AIF space, and plus the other is in the PMS format. In terms of cash, we are closer to double-digit cash in our portfolio as of now.
Okay. And the split between the two, the mix, I think it is 70-30 normally at extremes. Equity and
so as of now, the equity is 88%, 12% cash.
All right. 88% and 12% cash. Got that. Rahul, I just was looking at the recent entries that you all made, and one large trade that stood out was a hotel company, the Taj GVK deal. if I'm not mistaken, I think it's this fund itself, the Nippon India AIF, that was a buyer. 10-20 lakh shares, I think, is what you picked up. Tell us about this particular investment, and do you like the theme? Because the ARRs were moving up and occupancies were moving out. Then one believed one of the two will have to give. That didn't happen. So your take.
Yeah, sure. So at an industry level, right? I'll speak at the industry level. Even RevPAR, as you rightly mentioned, are up by 15%, even on a high base of last year. So your occupancies at the industry level is 64-65%, which continues to improve as of now. Even though the room addition is very high, we're still seeing the RevPARs to continue in the positive direction on a high base. We believe the valuations for a lot of these names, right, will have to be a little bit selective there. Wherever you are able to find a bottom-up idea in the sector, you'll have to pick up those. Hence, our view is that some of the names can do really well over the next 1 to 2 years.
Interesting. Explains why, in fact, one of those companies probably in your portfolio from this space, Taj GVK, has valuation comfort. And this block, I think, was a bit of an overhang of the stock. Got that. Let's talk about some of these new age themes. Paytm, that's a stock I think I got in early. Delivery has been actually a bit of an underperformer. Do you continue to remain positive on these names? Paytm, I think it would be up 70-80% from the time you started entering the stock. And delivery actually has been a relative underperformer. So how do you approach both of them?
Right. You're absolutely correct. So we've been entering the overall platform space since last 1 year when there was extreme pessimism or the negativity around the stocks. We saw the regulatory overhang in some of the names lasting for too long. And the management was correcting the strategy in terms of their cost base, in terms of their regulatory approvals. They were broadly in line. Hence, we started taking a call on some of the names that we were discussing. Other than that, some of the other platform names also we are positive. We believe they are the industry leaders in their respective spaces.
Got that. 100 points now, by the way. It's good to see, right?
Yeah.
Triple-digit gains. Otherwise, it's been a story of triple-digit losses. 100, 200. Take your pick, at least for the last 5-6 trading sessions. So 25,800 nearly now on the index as things stand right now. The low, by the way, today's been made at about 25,473. And let me just see if the Nifty Bank, which of course has been much stronger, it didn't fall as much as the Nifty did. Nifty Bank is also up about 1/3%. That's about 180 odd points. The broader market's seen a fair bit of pain. Small cap index, though, is still down 0.5%. But it's also recovered a lot from the day's lowest point. And maybe just a quick look at the mid-cap index as well. Mid-cap index has come back into the green. So here as well is a big, not a green candle, but a candle nevertheless from where the lows made far, far away from where we are at right now. Rahul, you have Edelweiss Financial Services as part of your portfolio, right?
Yes.
The alternates businesses coming to the any timelines on that one? That was the trigger being watched out for.
So as per the presentation by the management, which has been uploaded on the exchanges, they have given a timeline of April 2026. So that is where we expect them to come.
Is that a big part of it? Why you own Edelweiss?
So approximately 30-35% of the valuation is driven by the EEE business from that company.
I see. Okay. Now, Reliance is the other one, right? Is the number one holding for you. Again, here there are a bunch of triggers, etc. What's the just run us through your thinking here across various businesses.
Sure. So now SOTP basis, right? There are 7 lakh crores for retail if you consider the valuation. Plus OMC, your GRMs are at close to $6 to $8 on an average, where they are increasing the GRMs consistently. Plus all the new themes, investments, if you do the approximate valuation that you give to them at a book value, or probably some of them new age businesses that they're investing. We see decent upside risk reward on this at this point of time now.
Okay, all right, Rahul, thanks a lot for joining in, giving us the themes that you like. Wishing you all the best, and we catch up soon as the course of the year does progress. By the way, Hormuz mentioned a few stocks on the broader markets, and some of them are really buzzing. JTL, that's a rank underperformer. It's actually locked circuit up And volumes are very high. Wondering whether we're going to get some names coming in the large trades today, but that's one stock that I'm looking at. IFCI, I'm not too sure about how much of holding they have in NSE in terms of shares. Normally there's that debate. You compare IFCI's holdings in NSE with their market cap and the likes. I'm not too sure about how much they still have, but that stock is up 13%. Jaiswal Nico, a stock that's doubled in the last 1 year. We had explained the stock at around 45 rupees or thereabouts. It went to 90 rupees, it corrected around 80 rupees. But that's perked up a little bit as well. And Raj Ratan Wires, another stock, last week I saw the stock at one point of time was down 5-8% as well. Today, in fact, the stock has suddenly seen a bit of a surge, particularly in the last 1 hour or so. But I think Nimesh is ready. Nimesh is with us. He's here to take us through Deep Sea Chatter. Nimesh, what are you picking up? The shorts are running for cover and the bulls are thanking Sergio.
Well, Nigel, this is exactly what we've been explaining, you've been highlighting as well in your links, that around 0.64, 0.6, 0.65, market tends to see a bit of a pullback, and that's exactly what's played out today. A sharp short covering rally, and that's led to a big surge. So intraday, we've seen almost a 300-point move in the Nifty, largely on short covering. Having said that, there's a bit of recovery in the broader markets as well. And the extremely short positions by the FIs in the Nifty, the PCR were all indicating that a bounce was on the cards, and that's what it is. It's a pure bounce back from an extremely oversold levels. Thankfully, the flows are not that bad or that negative in today's market. So small buying is what I understand from larger FIs as well in today's market. I guess from a technical point of view, 25,450 is a level to watch on the downside. That's a crucial support level. If that gets taken out, then maybe you'll see further panic selling in broader markets and in the Nifty. So that's hopefully that holds on at least in the very near term. Having said that, given the fall we saw last week, the sentiment is very, very weak. The positions are quite light. And I don't think there is enough courage for HNIs and retail investors to buy. Over the weekend, I spoke to a lot of investors, and they all seem to be a bit dejected given the fall we saw last week. So a short covering pullback rally is what you're seeing right now, but doesn't look like the sentiment is quite strong in the broader markets.
Indeed, we're still on thin ice, actually. We'll still be a little bit jittery. But what about individual stocks, Nimesh? What are you picking up?
Well, some stocks where there's a bit of flow or some bit of reaction. So SBI Life stands out in today's market. It's gained 1%. There is buying interest, is what I understand from larger FIs. And also there is a Morgan Stanley tactical buy on SBI Life today morning. And they expect a very strong Q3. And hence you've seen a bit of an up move in SBI Life today. So that's the first name. The second stock is ICICI Bank. Over the last few days, there seems to be a flow back into ICICI Bank from larger FIs. So there is a bit of churn happening within the private banks, and money is moving back to ICICI Bank. The results are on 17, but beyond results, I guess any clarity on Sandeep Bakshi will be a big trigger to watch out for. So that's a trigger, and maybe that's the reason why you're seeing a bit of uptake in ICICI Bank in terms of flows. And the last one is Yatharth Hospital. For the last many days, there is a constant feedback of selling pressure from larger FIs in Yatharth. The stock has corrected from the recent highs, but still the supply from larger institutions continue in Yatharth Hospitals.
Okay, all right, Nimesh, thanks a lot for that. And by the way, we have some news flow that's actually trickling in with regard to JTL. The stock was as is up close to 18-19% or thereabouts, and now what's hitting the exchanges, which my ticker team just alerts us, is that there's a significant order win is what they're talking about from the Punjab State Transmission Corporation Limited for the manufacture, fabrication and galvanization of a 220 kV transmission tower material and substation structures. However, I couldn't come across the value of this particular order, but going by the wordings, it appears it's pretty large. The stock was already up, and now that order has hit the exchanges as well. Slip into a short break, come back, we'll continue our focus on markets. We'll also get in our technical experts. Welcome back. Well, Mitesh Thakkar is back with us. Mitesh, pretty okay trading session as we discussed earlier, but you've got a couple of trading ideas. Help us out with them.
BTST on SBI, the stop at about 1,006 for targets of 1,030. And Laurus Labs in a recovering market is remaining weak. So we'll take an activity there with the stop at 1,054 for targets of around 1,025.
Got it. Okay. All right. Thanks a lot for that, Mitesh. But, there are plenty of stocks that are moving around, and we've been analyzing it through the day. But Vivek joins us now to give us a nice roundup of all those stocks that are buzzing on the back of news. Vivek, take it away.
Well, that's right. We've taken 3 stocks on the radar today, stocks that are buzzing on the back of news flow. Some relief coming in. First on the list is BSE, quite a sharp up move. Important comments coming in from SEBI chairman where they said that no action or no change in derivatives market, at least for the time being. And along with that, some positive commentary coming in terms of the NSE IPO, giving a sentiment positive as well. The other stock on the radar is Manappuram. The company has gone ahead and denied the report of another agency that said that RBI has raised concerns with respect to the Bain Capital deal. They say the report has been denied, factually incorrect as well as speculative in nature. And the last stock on the radar is Shakti Pumps. The company went ahead and told the exchanges that they've received orders worth over 650 crore from the Karnataka Renewable Energy Development Authority. Remember, the order book at the end of Q2 was 1,300 crores, and the company has announced orders worth almost 1,900 crore just in the last month. So positive news flow coming in for these names.
Oh, thanks a lot for that, Vivek. And Shakti, yes, that one's really showing some strength, up close to around 5% as we speak. But the frontline names, there are a few stocks that are really bouncing back. Reliance Industries is one that we pointed out even last week. We said the bulls need to fight back. Then Reliance needs to defend that 200 DMA. It's done it quite well, and it's moving now with some strength. Let's see whether or not it can get to the recent peak. And Asian Paints as well is the worst in the price. Is that under ownership theme going to play out here? That one as well at the day's high. Amrish Palika, independent market expert, joins us on the show. Hi, Amrish. Let's talk about Asian Paints first up. You think it'll paint a greener color this year? It's said to give up its underperformance, or would you stay away? There's too much of uncertainty.
No, not at all. In fact, I've been a buyer in Asian Paints for a while. And I think what's going in favor of Asian Paints right now is 2025, we saw a major underperformance from Asian Paints because of the possible competition. And now we are seeing that the competition is not really eating much into Asian Paints market share. So that's one positive. And number two, as far as the major input is concerned, that depends on oil. And with whatever has happened in Venezuela, I think should keep the oil prices more or less stable. So I think that's the other positive which is there for Asian Paints. So I think 2026, we should see Asian Paints outperforming. I'll not be surprised if we see levels of about 3,400 plus.
Got it. All right.
Right. Amrish, run us through your pick of the day, which is Keynes, I believe, right?
Yeah.
Again, a stock which has quoted some controversy recently.
Right.
What's the call?
That's a confident call again on Keynes. It's an integrated electronics manufacturing company, and they supply to multiple industry verticals such as automotive, aerospace and defense, industrial, railways, medical, and IT IoT. And they have around 500 plus customers, including MNCs across 30 countries, and diversified into OSAT, which means outsourced semiconductor assembly and test. And the pilot plant is already operational. They have about 22 advanced manufacturing and design facilities. 3 of them are overseas. And the customer concentration risk is also decently low. And like you rightly said, the stock had corrected well post the recent research report, questioning its accounting policies as well as related party transactions. Post that, we've seen a major correction, but I expect the management to give clarity during the Q3 earnings call. On the positive side, I would say recently they have signed a definitive agreement with the CLSQ for a JV for sovereign Indian post-quantum semiconductor. So this, I think, is positive. In Q2, EBITDA margins had increased to about 16.3% due to richer product mix and higher value add. And the order book position also is quite robust at about 8,099 crores last quarter. So I'm expecting an EPS of 28, for FY28 of 165. So the target price is about 5,000.
Okay. All right. Got that. Amrish, request you to stay with us. You're positive on Keynes. You've been a buyer at Asian Paints. We'll discuss more stocks with Amrish for the time being. We'll take a short break. More market talk lined up on the other side.
111 points and counting, 25,800 for the Nifty, and it's the IT stocks which have done well so far. TCS is in focus ahead of earnings, as is HCL Tech. In fact, Rima's moved to the TCS headquarters to tell us what the street is expecting this time around. Rima, stock's seen a massive recovery from the lows, just the way the market has. All right, we'll just try and go across to Rima in just a bit. Meanwhile, I remember Rahul at the start of the show was saying that he likes Reliance and he likes Bharti Airtel, two of the stock picks that he had given. And Bharti Airtel, as on Q, has moved higher. It's currently about 1% higher. And we're also seeing some traction on Jindal Stainless. So the metal stocks which have been doing well, but broader market, Jindal Stainless is one which has spiked. GAIL is the other one which too has moved higher. Meanwhile, we do have Amrish Balika joining us as well. Amrish, in a market like this, which has been fairly volatile and grossly oversold until noon today, was there any idea that you liked and you picked?
In fact, the one which I just suggested, Keynes Technology, that's one stock which I've been positive on, especially after the sort of a correction which I've seen. I think most of the bad news is already priced in. And possibly once we have clarification from the management post the earnings, I think we should see the upward movement in that stock.
Lemon Tree after the deal that was made?
Lemon Tree, I think this deal is quite positive for the company because clearly it is going towards being asset light, and this would really help in that form. So I think we should see an upside from here, maybe of about 15 to 18% again over the next 6 to 8 months.
15 to 18% over the next 6 to 8 months. What about BSE and GMR Power? BSE is zooming now, up around 5%. And GMR Power, when we started the show, it was about 6% higher. Now it's moved about 9%. So there is some traction. Do you have a view on either of them?
BSE, I think it's a rub off one, whatever clarification has come now. And number two, because of the possible NSE IPO. And generally, whenever such large IPOs are in the offing, the stocks in the same sector do really see a decent move. And there are basically just two stocks in this, MCX and BSE. So I think both of them should see some more upside from here. Assuming that the markets hold on, then we should see a decent upside from there.
All right, we take that point. Thank you so much, Amrish, for joining in. What we'll do is we'll take your leave. Actually, don't go anywhere, though. 3:30 onwards at Markets Forward, we will hear Amrish's view on a whole host of stocks. Let's go back to Rima now. Rima, TCS, ahead of numbers, the stocks moved to the high point of trade. What's the street working with?
So let me start with TCS, where we're expecting a fairly lackluster, muted sort of a quarter. Constant currency revenue growth seen up 0.3%, 0.5%, margins flat at 25.2%, a modest 5-6% increase in the company's profitability, the bottom line, PAT. But what the street will watch is the body language, because the company's aspiration is to become the world's largest AI-led technology services, and they're backing it. They've made investments in data center, they've been aggressive in terms of the acquisitions, and for the first time in the December analyst meet, the company even quantified the AI revenues, $1.5 billion, growing faster than the company average, and accounting for 5% of the overall top line. So that's one. Secondly, will the company be able to achieve its guidance of FY26 international revenues being higher than last year? Ambit thinks it's going to be a bit challenging. And thirdly, will there be any exceptional items, one-time hit to the company's profitability on account of the $194 million payout due to the IP infringement case or the employee restructuring? Now, when it comes to HCL Tech, we're actually expecting a very strong quarter. Dollar revenue growth is seen up constant at 2.7%, constant currency revenue growth closer to 3%. But generally, Q3 is a stronger quarter for HCL Tech on account of its products business, where seasonally the company does well, and it's also higher margins. So margins are going to inch up for the company to 18.3%, and this is despite a wage hike impact, which could hurt the margins at 70 to 80 basis points. Now, with respect to the overall guidance, now HCL Tech has guided for 3 to 5%, but analysts believe the company may narrow it, which means raise the lower end. So maybe 3.5 to 5% or 4 to 5%. Margins will remain unchanged. Two parts to watch. One, the ramp up of the AI revenues. In Q2, they had about $100 million of advanced AI. What does that number stand at? And two, again, any employee restructuring related costs that the company will undertake.
Okay, all right, Rima, thanks a lot for that. The stock clearly excited getting into the numbers. Let's see whether or not they deliver what the street is sniffing. But the markets, it was what a volatile day. We recovered close to 300 points from the lows of the day. Fired up by Sergio Gor's comments that potentially there could be a deal in the works. It may not be announced soon, but at least giving some hope. What did well? Metals and metal-related names. Coal India.